Ed?
Yeah, it's been an incredible day in financial markets. Yes, we ended off session lows in terms of the equity story. Look at the S&P 500 off just a quarter of a percentage point. But investors clearly trying to work out their exposure, position themselves. This is February 28th, last day of the month, and it's the second consecutive monthly decline for US equities, the worst streak going back to October 2020. A big part of that story, of course, is yields. You see a big drive, a big advance in the bond market, US 10-year yield, the benchmark in the US market, off by 14 basis points, 1.82%. So clearly investors taking an assessment. Semiconductors have been such a big part of that sanctions package. Well, the stocks off by 0.7%, but it had been down more than 2%. So also investors working out the exposure there. Bitcoin's really interesting. Trades 24/7. It's Monday. You and I back here in the studio. Over the weekend, I was not looking at cryptocurrency markets. But you see that big jump, the biggest since July for Bitcoin. The consideration here is that whichever side of the sanctions you sit on, crypto adoption, crypto use may become more prevalent in the wake of those, particularly financial sanctions, to work out those that might be strung by certain currencies. Also come with me into my Bloomberg terminal. Yes, there's a lot of red on the screen at the moment, but there are also sectors that have been winners. This is the outperformance of the defense sector in the S&P 500 relative to the broader index. And you can see money has been going into the defense stocks. We know all about some of these NATO countries that are upping their defense spending unprecedentedly so in the wake of what we're seeing out of Ukraine. And finally, there's the specific story of Russia and sanctions, a lot of it around commodities. You look at oil holding at around $95, $96 a barrel, below 100, and we held pretty steady there as sanctions become more and more encroaching on the energy markets. But also the Bloomberg Commodity Index shows how broad-based this is. Soft and hard commodities jumping by the most since October 2021. And finally, the Van Eck ETF. This is a US-listed ETF which tracks Russian equities. Well, the Russian markets closed until further notice. This was an issue of price discovery, using that ETF, tracking Russian assets down 30%, the biggest drop, Emily, in history.
All right, Ed, thank you. Lots of moving parts there. As sweeping sanctions shake Russia's financial system and ripple worldwide, the Bank of Russia is taking desperate measures to seal the nation's economy. And the question is, what more can the West do? Bloomberg's Jordan Fabian has more. Jordan, as far as we know, how much farther is the U.S. willing to go, especially when it comes to SWIFT or otherwise?
Right now, they're saying, U.S. officials are saying that nothing is off the table. But one area they've been very hesitant to touch is the energy sector, which is, of course, the lifeblood of Russia's economy. They're saying this morning that there's going to be certain carve-outs or exemptions for energy-related trades when they do announce the specifics of this SWIFT ban. That being said, the sanctions package thus far hasn't convinced Vladimir Putin to withdraw from Ukraine. So the question is, if this latest round of central bank penalties doesn't do the trick, then what does? How far is the U.S. willing to go?
And obviously, Jordan, you're covering the White House for us. Talk to us about how the Ukraine situation is changing President Biden's plan for the State of the Union coming up tomorrow.
When the White House was initially conceiving the speech, they were thinking of it as a broad reset domestically on the President Biden's domestic agenda, which has been stalled since late last year, and also on the COVID situation. Those two things are still going to be prominent factors in this speech, but there's going to be much about the situation in Ukraine, and they're going to try and cast it in a way that it makes it part of President Biden's effort to promote democracy both in the United States and abroad.
Well, and there's also this question about how these sanctions against Russia impact economies around the world and impact the U.S. economy, which is already hurting from inflation. How is the president thinking about that?
As I mentioned, the energy sector is a huge factor here. Inflation has been a tremendous bugaboo for Biden politically. It's really helped drag down his approval ratings. And thus far, we've seen a real reluctance by the U.S. government to go after Russia's oil and gas sector because they fear rising oil prices beyond how far they've already risen. So it's going to be a big test for them in the coming weeks and days to see, again, if Russia is not pulling out, not making any concessions,